Hello and welcome to NDTV Profit. My name is Rucha Sumaya and today we are going to talk about PVR Inox. Well, Stree 2 has done really well at box office, hitting about 200 crore in sales as of day 5. But to talk to us more about its impact on PVR Inox, we have the management from the company itself joining us today. We have Mr. Gaurav Sharma, the CFO at PVR Inox, and also Mr. Sanjeev Bijli, the Executive Director at the company. Hello and welcome to this show, sir.
Hi, how are you? Thank you for having us.
Thank you. So how do you see the impact of Stree 2 in particular doing really well at the box office to have an impact on the stock, and how do you look at the second half performance of the company?
Well, of course, it's very reassuring that Stree 2 has done well. Till yesterday, it has done about 242 crores net box office. It's always very heartening when a film does well. It's coming off a very successful first film, Stree 2, which was released a few years ago. So far in July, we've had a massive film like Kalki, which did about 646 crores net box office. And now Stree 2, which has done 242 and growing. The word of mouth is positive. People are still keen to come and watch it. I feel it will have strong legs in the coming second weekend as well. So, of course, all these are very important and significant barometers which help us in getting more admissions, higher admissions, good ATP and good SH, and ad spends obviously translate into better numbers for us.
Right, Mr. Bijli, thanks for that. But also there were a few movies which didn't do really well at the box office, as you had called out for these names during the first quarter earnings call, such as say Auron Mein Kaha Dum Tha, and you know, Maidan, Bade Miyan, Chote Miyan. So these kind of movies didn't do really well. So do you think the losses from these kind of softer collections is now getting covered up, or don't you see that as a headwind for the company's growth?
Well, you know, that's the nature of our business, actually. Some movies do well, some movies don't. The movies that you have mentioned, of course, underperformed, but that happened mostly in Q1. But there are other films also in Q1 that did better than we expected. There were some smaller films like Shrikant, Mr. and Mrs. Mahi, Munjia, which came out in June, which was unexpected hit. These films did actually very well, and they did better than what we had anticipated. So they kind of covered up for the loss of the admissions. But we are looking at a trend where each and every quarter, quarter one, of course, was muted because of various external reasons, such as the elections and IPL. But now we do see a positive trend coming in Q2. And that seems to be sustaining itself with the kind of content that's coming out in Q3 as well.
Right. So talking about Q2, you'd also mentioned about Kalki doing really well. So do you see the spillover positive effects of Kalki also coming into the second quarter and helping the company sustaining the top line?
Yes, because Kalki got released end of June. So, of course, we only played the film end of June for about 3-4 days, but most of the admissions, the bulk of the admissions came in July in quarter 2.
Right. Okay, my next question is to Mr. Sharma. You mentioned about slower ticket price growth in the first half, you know, during the first quarter conference call. So do you see the impact of that coming in the second half as well?
Yeah, so as we had mentioned earlier that, you know, ticket prices are subject to the sort of movies which are playing at the cinemas. Due to lack of major blockbusters in quarter one, we saw a slower growth in ticket prices, and therefore, you know, that impacted the growth. However, as we entered Q2, the ticket pricing has seen a very strong recovery, driven by films like Kalki, Deadpool and Wolverine, Stree 2, etc. And some of these films do very well in premium formats like IMAX, 4DX, and similar such formats, where, you know, it provides us opportunity to leverage premium pricing strategies. So, you know, we believe that this momentum is expected to carry forward into the second half of this year, supported by a very strong pipeline of films across different languages.
Right. Following up on that, actually, Karnataka government had levied 1 to 2% tax on movie tickets. So do you expect that to impact the footfalls in the state?
We haven't received an order as of now, so I don't think that is confirmed.
Okay, okay, got that. So if this gets materialized, do you expect any impact on the footfalls?
As I said, it's something which is not yet implemented. So we haven't really taken that into consideration in any of our projections of footfall.
Right.
Right.
Okay, got that. Fine. So moving on to the re-release strategy, that you have adopted. I mean, really good strategy is what we can see based on the traction received amongst the youngsters. So can you tell us more about how this is working out for you, and do you expect this strategy to continue going forward as well?
Yes, because at the end of the day, we are a cinema exhibition company that primarily likes to show films. And we had done a few experiments in the past, and they were very successful. And therefore, we decided to institutionalize that and come up with a brand called Nostalgic Cinema. Most recently, we released Rockstar again, and that did a gross box office of about 8.5 to 9 crores, which is a large number for a film which was released a few years ago. Overall, we've garnered about 1.2 million admissions out of these films which have been re-released. So we're always out on the lookout for films which have still resonate with the consumer, still have some nostalgic value, still have the ability to play again and bring the consumers back in. So this is something that we will keep doing in times to come. And we're trying to source as many good films as possible.
Right. But what percentage of revenue will this strategy aid for PVR Inox, in particularly Mr. Sharma, if we can get your comments on this?
As Mr. Kumar said, in quarter one, the re-release strategy that we adopted and the alternative content that we played in our cinemas led to about 1.2 million footfalls in Q1 itself. And, this strategy plays out very well when, sometimes when there is gap between big releases or some of the films which are playing in cinemas and not doing so well. But in overall scheme of things, they are still a very small portion of our overall revenue. However, it keeps the consumers engaged by bringing them back to cinemas and continuously re-engaging with them. So that's a strategy that we are adopting, but from a revenue perspective, not a very significant needle.
So do we incur more cost, and is that not turning into revenue, or how does this really work, if you can explain?
No, we don't incur any incremental cost because cinemas are running. We run a fixed cost business. We have to pay salaries, we have to pay rentals. So if some of the films which are currently playing in cinemas are not doing well, or there are gaps between big releases, the cinema shows are programmed in a manner that we run this alternative content or re-releases or some of the nostalgic film festivals, which helps in sustaining the occupancies and drive occupancies and bring people back to the cinemas. But from a cost perspective, no significant incremental cost is there.
Right. Okay, got that. Moving on to the Passport 2.0, which you had released in March this year. Can you tell us more about this? I mean, you had definitely mentioned about it getting good traction during the first quarter as well. But more comments on the same is what I would like to know.
So Passport is doing well. It's one of the initiatives that we sort of relaunched a few months back. The idea was to bring consumers back to cinemas, especially during the weekdays when the occupancies are lean. So it's targeted towards price-sensitive consumers. And, we have sold a significant number of passports. More than 4 lakh passports have been sold so far. And, we will be continuing to experiment with this strategy. This is one, it's a very unique initiative that we have launched, and we will scale this up going forward and find a way where consumers are enticed enough to subscribe to this program and come back to cinemas as frequently as possible.
Right. You'd also mentioned about the slow CAPEX, which you would like to target for FY25, but also mentioned about adding 120 gross screens and say exiting from the next 70 screens. So how is the progress on that? Do we expect lower CAPEX during the remaining term of the year, number one? And also wanted to know about your debt which you had paid off in the first quarter. Is that also expected to come down?
Yes, absolutely. But
Sure.
yeah, we're on track of opening 120 new screens this financial year and shutting down 70 of the screens which were underperforming. So, a net addition of 50 screens is what we are looking at. And since the addition of new screens is only 120, our overall CAPEX is much lower this year. That's also because we've been very carefully choosing the projects. We're very conscious of where we build these multiplexes, wherever there is still a high demand for multiplexes and cinemas. And we are getting new good partners and good malls and good developments to partner with. So that's on the CAPEX side. On the debt side also, yes, we are looking at further reducing debt. We have been focusing on selling some assets which could generate about 300 to 400 crores, which will be used up to reduce the debt further.
Right. Any comments on this, Mr. Sharma?
Yeah, I think as Mr. Kumar said, we are very careful about our CAPEX spend this year. This year, our CAPEX is going to be at least 30% lower than last year, while we'll open about 120 new screens. We also, in the month of May, we had laid out the strategy around capital light transformation, where we are now partnering with developers for contribution on the CAPEX front. We are also, new screens that we are opening across different parts in the country are on the FOCO strategy, on franchisee-owned, company-operated cinemas, where the CAPEX investment from PVR Inox is lower than what it used to be in the past. So some of these initiatives will pan out over the course of next couple of years, and we will see an incremental impact on our return metrics as well. I think that's it incrementally from what Mr. Kumar mentioned.
Right. Got that. Thanks, gentlemen, for that wonderful conversation. Due to crunch of time, we'll have to wrap this conversation. But lovely talking to you, and we want to talk to you about the next quarter very soon. So that was from the management of PVR Inox. But do stay tuned to NDTV Profit for more such updates.